Let's get into it. So you actually sent me a newsletter earlier today by Crypto Haze, titled "Energy Canceled." Why don't you go over a little bit about, I guess give me the 50,000 feet view of it, and yeah, we'll get into it. It's a little bit about the petrodollar and kind of like the overall macro environment, if I'm not mistaken. Is that right?
Yeah, correct. I mean, so I took my daughter on a walk this morning with my wife, and it was probably about just over an hour walk, and I said to my wife, "Do you want me to explain to you?" I had just read this blog this morning, and so I said to her, "Do you want me to explain to you what is going on, macroeconomically right now, and with Russia and Ukraine and she's like, okay. So I spent an hour and 10 minutes just like basically nonstop talking to her, explaining this blog post. If people haven't checked it out, it's called Energy Cancelled. It's by Arthur Hayes. He's one of the co-founders of BitMEX, which is one of the earliest Bitcoin and crypto derivative trading exchanges. And I think the guys so Arthur Hayes is sort of not in hiding, but he's been indicted on, like, I think breaking the Bank Secrecy Act. I think all the co-founders of BitMEX have been. So I think Arthur Hayes he negotiated some deal and turned himself in. I think he was like hiding out in Singapore, and he like negotiated to fly to Hawaii recently, or in the last like 6 months or a year, fly to Hawaii, turn himself in. I don't know exactly where they all sit now, but I think one of the guys is in jail. And the rest of them are like working on plea deals and turning themselves in, and then like, paying fines and whatever else. So yeah, for people that don't know, but and I think they started the company in Hong Kong. So there's stories floating about of like their early days when they're making boatloads of money trading and running BitMEX and just having a lot of fun in Hong Kong. So, but yeah, it's Arthur Hayes, Crypto Hayes on Twitter. And all his blog posts are amazing. I don't know if he has like a set schedule of publishing, but they come out every so often, maybe like once a month, and he covers sort of what's going, like the biggest thing that's going on. And he's just a very good writer. Like, not only like is he a clear thinker and writer, but he's a very good storyteller. So you get, like, his blogs are very long, but you get engrossed in them. This latest blog, he's basically covering what's happening with Russia and Ukraine and the implications, the macroeconomic implications, to the commodities markets, and also to currency and fiat and world reserve currency markets and gold and Bitcoin. So the general sort of gist of it is that the US has basically began to destroy trust in the US dollar as the world reserve currency. The way most economies function now is everyone has a sort of safe haven asset that they save all their, especially sovereign nations, where they save their reserves. So countries that have trade surpluses, which means basically they export more goods than they import, so they have positive trade balances. Those countries store their excess wealth in U.S. treasuries. That's been traditionally the sort of safe haven asset. And so that's meant that the U.S. can issue pretty much like unlimited amounts of debt, because there's always been this demand for dollars from countries that have trade surpluses who buy treasuries to store their wealth, right? But of course, that requires that the country that's buying the T-bills, requires that they be able to trust the US, that they're not going to devalue the dollar, that the dollar is still going to be like a safe haven reserve asset, that the US isn't going to default, that they can sell those T-bills whenever they need money. So what people are starting to realize with what's happened in Russia is that if you piss off the US, or you do something that the US does not like, they essentially control you via control of the currency and control of the T-bills. And they've essentially canceled, like, I think Russia had something like $630 billion in foreign reserves in euros and US dollar denominated assets. And all those are now essentially canceled, or, blacklisted. They don't have access to those reserves anymore. And that's it's made countries realize, like, if we're saving in US dollars, we're at the mercy of whatever the US wants us to do. The sort of the next domino in this set is China. I think China has like something like $3 to $4 trillion of US treasuries, which they will now be thinking about, like, before I go and do something to piss off the US. I want to take Taiwan back, but I don't want to lose $4 trillion. I don't want that to cost me $4 trillion. So what are all these countries going to do now? They're all going to dump US assets, but they're basically all going to dump fiat assets that are controlled by external sources, and they're going to move to holding wealth in commodities. So Hayes thinks the case that Hayes makes is that countries that have lots of natural resources, they're going to make sure that their countries are taken care of first. So they're going to be holding commodities for themselves to make sure they're populated. They have enough coal for the population, gas for the population, oil for the population, wheat, nickel, copper, whatever, all these commodities. Like any country that produces them, they're going to make sure that they can hold on to a certain amount of them, and then maybe sell the rest off to the rest of the world. And they're going to be picking very carefully who they sell to. And then Hayes makes the case that sovereigns are going to move to holding gold again as like their sovereign wealth reserves. And that the individual, because gold is so cumbersome to physically take custody of, the individual's version of using non-state money is Bitcoin. So he thinks that over the next decade we might see he's saying we don't know. This has never happened before, where we cancel a country, basically take their foreign reserves that are denominated in US dollars or euros, and then also stop trade with them when they're the 12th largest economy in the world and one of the biggest producers of natural resources. So we have no idea what the second, third, fourth order effects of this are going to be. But he seems to think that there's going to be a massive shock. So all assets, there'll be like basically just a massive market crash in all assets. And then there will be a sort of reorganizing of what assets are important and which aren't. And he thinks like gold, Bitcoin come out on top here. And he made price predictions for gold to go above 10,000 an ounce. And I think it's about 1,900 or 2,000 an ounce now. And then his case for Bitcoin is $1 million. I don't know if he said $1 million or more than $1 million, but obviously like that's a 5x move in gold and how much? 20x move in Bitcoin price from here, more than 20x. So pretty crazy times.
Yeah, for sure. So